right, thank you. I represent the Global Impact Investing Network. We call ourselves the GIIN, non-profit organization that's dedicated to increasing the scale and effectiveness of impact investing. We do this in a number of ways, and one of the ways is through conducting and disseminating research on important questions of value to impact investors. What I'm going to do today is present to you preliminary findings from a publication that will come out in April on the impact investing landscape in East Africa. I'll quickly go over the study overview, present some key findings from the research. I might skip the country snapshots for today just because we're running a little bit behind schedule, and then wrap up with some key regional themes. So we've been working with our research partner, Open Capital Advisors. Open Capital Advisors is an organization based in Nairobi. They've been operating for several years in East Africa, and essentially they act as an intermediary. They work with SMEs and business managers in East Africa to help them raise impact investing capital, and they also work with impact investors to help them identify investment opportunities and place capital. So they've got significant experience working in East Africa and in-depth knowledge of the markets in that region. We've been working with Open Capital for over 6 months now on conducting research into these 11 countries in the East African region. In particular, we've focused our efforts on the 5 highlighted countries, Ethiopia, Uganda, Kenya, Rwanda, and Tanzania, as our researchers indicated that there's a significantly greater volume of impact investing activity in those markets specifically. The types of research that we've done, we've looked at a broad socioeconomic overview of the markets, the supply of impact investing capital in an attempt to size the market. We've also looked at the demand and the need for impact investing capital in these different countries. We've analyzed the broader impact investing ecosystem, so specifically regulations and other players in the market that are help facilitating the flow of capital. And finally, we've looked at opportunities and challenges for growth in these different countries. I definitely won't be able to present all of this to you today, so I'm going to just scratch the surface, and I'm going to focus especially on the supply of impact investing capital, and then the last point on some of the opportunities and challenges for growth. The research report, like I mentioned, will be published in April, and like all the research that the GIIN supports, it will be freely publicly available and disseminated. So we found that over 150 impact investors are active in East Africa. Not all of them have a local presence, but a significant number of them do. The impact investors range across different types, including development finance institutions, family offices, foundations, commercial banks, as well as a large number of impact fund managers. Nairobi happens to be the main hub in the East African region, and many organizations are based there, but there are also significant numbers and a growing presence in some other local markets. I should, of course, point out that, as I mentioned before, these are preliminary results that we're presenting today. So while we're very confident on the numbers that you'll see on subsequent slides, I would suggest that you wait till the final report comes out for the final numbers. So let's move to some of the key findings from this research. So there are 2 things that we can look at on this initial chart. The red columns represent investments or disbursements specifically by development finance institutions, and the blue ones by all other impact investors. And we've separated these for obvious reasons. The first thing that we notice is that by country, Kenya has received close to half the impact investment capital disbursements in the region. Uganda and Tanzania make up about 13% and 12% respectively. Ethiopia, despite being the largest country in the region in terms of GDP, has received about 7% of impact investing capital. Rwanda has received about 4%, which is more or less in line with its GDP share in the market. It's also interesting to note that DFIs, of course, have been I guess, the main investor or contributor the lion's share of impact capital to date. Close to 85% of impact investment disbursements in East Africa have been through DFIs, whereas 15% through other investors. Interestingly, though, if you look at, and perhaps the numbers are quite small, so you may not be able to see it in the back, but in terms of number of deals, at least in the 5 priority countries, the non-DFI investors have actually invested in more transactions than the DFIs have, which obviously indicates that DFIs tend to make much larger investments. We can also take a look at how impact capital has been dispersed by sector. On the left, we have disbursements by DFIs, and on the right, disbursements by other investors. I think the first thing to note is that financial services is the most popular sector for impact investment capital, regardless of the investor type. But then we see some significant variation. After financial services, the main sectors that DFIs have invested in include energy and infrastructure, as well as mining and manufacturing. Other investors tend to focus on agriculture and housing. One interesting thing to note is that the number of investments in energy have been about the same between DFIs and non-DFIs. DFIs have invested in 38 transactions in energy, non-DFIs in 36, but if you take a look at the amount of capital dispersed, it's significantly different. We're looking at over 2 billion versus about 90 million. So again, that gives you a sense for the different types of investments that different investors are pursuing. One other thing I think worth noting is that investments in basic services such as education and health have not really attracted as much capital from either type of investor. This third chart, we can look at investments by deal size, or on the left we have DFIs, and again on the right we have other impact investors. What we note here is that the size of each pie is the volume of capital by deal size, and the number within each pie is the number of transactions by deal size. So there's a couple of things worth noting here. We notice firstly that over 50% of DFI impact investments in East Africa have been in transactions that are over $50 million, whereas only 10% have been in transactions that are below 1 million. On the right-hand side, we have a look at impact investors who are non-DFIs, and we see that the vast majority of transactions, or close to 80%, have actually been below $5 million in size. And so that gives us a sense that probably explains why many DFI investments are going into financial services, energy, and infrastructure. They offer the large ticket sizes that these investors typically tend to look for. I think the findings on this chart probably are not a big surprise. What we're looking at here is instrument use by different investor types. We see that DFIs are predominantly debt-focused. Close to 3/4 of their investments are through debt, whereas non-DFI investors, close to 3/4 of investments are through equity. And this tends to support the finding that early-stage debt is a significant gap or need in the market, given that the non-DFI investors are the ones that are primarily investing in smaller organizations, and they're primarily investing through equity. So debt at the early business stage is a critical gap, which is highlighted in much more detail in the report. I'll skip the country snapshots like I mentioned earlier, and I'll move on to some of the broader regional themes. There are 5 regional themes that I wanted to highlight. I think the first, and I think it's fairly obvious, and as was mentioned in the earlier remarks, there's a significant need for impact capital in the region. Almost all the countries in the region are significantly below global averages on human development indicators related to health, education, poverty. There's also significant lack of access to basic services such as energy and financial services. All of these create opportunities for impact investors to invest in the products and services that will increase access to these goods and services. The second is the centrality of DFIs. One thing I mentioned before is that 85% of impact capital dispersed to date has been through development finance institutions. The other thing worth noting is that even impact investment funds are heavily reliant on DFIs. Close to 50% of capital that impact investment funds in the region have raised is from development finance institutions. And the DFIs typically tend to be the anchor investors, and so the first investors that then help encourage other investors to put money into impact investment funds. I think a third thing worth noting is that investors in the region typically don't have country-specific allocations, but rather they have allocations for the region at large. And what makes this is important because what this means is that even though there are some countries that have not received much capital to date, given that investors have a regional allocation, if attractive opportunities arise in these other markets, then there's significant capital that's already available for investment in some of these smaller countries. The fourth thing is a set of common challenges that are common across the region. And these challenges, I think, happen at both the investee level and the investor level. And I'll just touch on a couple today. The first is that many of the businesses in these countries are informal businesses. They lack formal financial records and also suffer from a lack of skilled human capital, which makes it difficult for them to make a business case for the use of capital when they go and meet with investors. There's also a significant challenge on the investor side. Even though many of these organizations have some local presence in East Africa, most of the decision-making happens outside the region, and many of the investment committees are based overseas. So without that local presence and local decision-making, due diligence processes and capital disbursement processes end up taking much longer than they might otherwise. Of course, the flip side of challenges is opportunities, and a couple of the key opportunities that were highlighted through the number of interviews that we conducted in these countries relate to, one, establishing a local presence in these markets, two, engaging closely with technical assistance providers in order to support the investments, both pre and post-investment, which will reduce the due diligence timelines, as well as increase the business performance post-investment. And I think the third thing that was highlighted is that investors would benefit a lot from developing sector expertise in these markets. Many investors to date have been quite sector agnostic, but going forward it's been identified that certain sectors offer key opportunities in different markets, such as agriculture and off-grid energy, and so developing sector expertise will open up significant opportunities for investors in East Africa. All in all, there's a fairly positive trend over the last 4 years. We've seen 11% average growth in terms of capital disbursements by impact investors in the region, from about a little over $1 billion in 2011 to over $1.4 billion in 2014. And the numbers for 2014 might be underestimated because obviously the year just finished and not a lot of data on the year is yet out. So just to wrap up, as mentioned earlier, this report will be released in April this year. It'll have 13 chapters with 11 country chapters, one on each of the countries that we just spoke about. There'll be a chapter focused specifically on development finance institutions and their activity in East Africa, and then a broader East Africa regional chapter looking at common challenges and opportunities in the region. The GIIN is planning to release 2 more reports of a similar nature, one focused on markets in Western Africa and one focused on markets in Southern Africa by the end of 2015. This research will begin in the middle of the year, and we're looking for local research partners and organizations that are interested in being involved. And so if you are one of those organizations, please feel free to reach out to me today. The last thing that I'll mention is that the GIIN is also looking to hire up to 2 full-time staff in Sub-Saharan Africa to increase the effectiveness of our work in the continent. And so that's something that we just thought would be very important to promote in this group so that you can spread the word with your networks. So thank you. That's just a quick overview of the East Africa landscape. If there's any questions, my email address is at the bottom. Thanks.
Thank you, Abhilash. Maybe we could take a couple of questions.